Between the fintechs and the financial institutions, what started as two different directions has merged together to become one unified stream. And this stream has different ranges. This stream has different ranges. One, which wants to be a pure financial institution. The second, which wants to be a pure technology company, and the shades. And what is going to happen in next 2 to 3 years, we will have clear structuring coming in, maturity coming in. So there would be people who would be pure tech players, people who would play as service providers, people who would be pure full stack. I'm not a bank, I'm not a provider, I'll be direct to customer servicing, and I'm matured, and I'm going to scale that business sustainably. And the ones who have crossed the line over, that we would be regulated financial institutions. What has happened is some financial institutions have said we'll become a utility platform. That we have a license as a bank, but we will open all our APIs to let other fintechs build on top of us. And then we become the enabler for everybody else. So you actually have in some of the markets, banks who have jumped from being the traditional bank to a tech company and servicing, running, monetizing, and scaling like a tech company. So that merging and transposing and both sides picking each other's attributes, that has been a beautiful journey. The next phase, I believe, would be that there would be a much bigger broadening of the pie, because if you just look at the sheer amount of penetration of financial services, there is a lot more which can be done. If number of people who are insured, for how many things are they insured enough? Are they saving enough? Globally, if you see, so many countries are having a problem with people having not saved enough for their retirement. So financial services is not about having a debit card and making payments. It's the save, the protect, the insure, all of that is very important as well. And how financial services are improving your life quality. And that is something where a lot more can be done. Now you have more data, you can predict stuff much better, you can underwrite stuff much better. And the cost of delivery has become less, because now a large number of people, there are more mobile phones than toilets. So for you to be able to reach the customers over internet or phones is much cheaper. So the cost of delivery has gone down, which ensures that there is a huge, billions of customers who can be served so much more. And even people in advanced economies, for example, you have gig economy workers in Singapore. So people who are driving taxis, who are delivering food packages, e-commerce packages. A lot of them cannot actually get a credit card because they do not have a payslip. To get a credit card, you need a payslip. You can't get that. And because you do not have a salary, you don't have a CPF. You don't have a CPF, that impacts your retirement planning. So think of it this way, a person who actually has a shiny smartphone, has 2 bank accounts, 3 debit cards, and he also needs help on his retirement planning and insuring and getting a credit for his need days. And that's an example of like a super developed economy. And think of it, if you're serving these kind of customers, that's not a zero sum. These customers today are not served, and if there are platforms who understand these customers, who know how much they're earning, what are their needs, and they can serve them, then that helps the society. The way I would look at the next phase of growth, underbanked and underserved are different categories. You can be banked doesn't mean you are served fully. And banked is only one part. Bank doesn't mean you have enough savings, you have enough lending, you have enough protection, insurance, retirement planning, pensions. That's all outside. So banked is one, served is another. So a lot of people are banked but not served. So yes, on one front, we need to look at the people who need to be brought into the domain of financial services. And that can be done via wallet, via a basic saving accounts. There are multiple instruments. Bringing them into this formal financial services fold is one step. But those who are there, they are also underserved on multiple accounts to ensure that we help our society being served properly. The underserved is a bigger problem than the underbanked. And that's a larger pool, and that's where there are also significant monetization opportunities. So when you look at, it's not just the underbanked, it's the underserved where the real opportunity lies in the short term. Long term, you're unbanked. When they become banked, on day one, they will be underserved. And then the funnel steps in. So the underbanked becomes banked, and then they become underserved, and then they become served. So that's where it's a large funnel. So for next 7 years, say 5 to 7 years, it's just growth on all fronts.